Good morning, everybody. It is Thursday, Thursday, April
It
3rd.
is Thursday.
Welcome to the Victoria Real Estate Show. I'm Jane Johnston with the Briar Hill Group, and I'm here with...
Hey, everybody. Andrew Plank here with Vibe Real Estate Collective and Royal LePage.
Jen Lowe, mortgage broker with DLC Modern Mortgage Group.
All right. How are you guys doing?
Yeah, good. Raring to go.
Good. Okay. So I'm just sorry. We've changed the format on some stuff. So I'm just seeing there's no way to have just three of us on right now.
Right. Okay.
We'll figure it out.
You keep talking, Jane. I'm going to fix this right now.
Okay.
Welcome back, Jane.
Okay, I'm just going to put this way. Alrighty, so let's start with the stats. Well, actually, we're going to do the stats update. And then, Jen, first of all, let's start you with your mortgage update. How's it going?
Well, it's all been tariff talk. And then yesterday, no new tariffs.
Right.
So there is still the 25% tariff on automobile and aluminum, but no new tariffs. The market, of course, obviously reacts to that news, and the bond yields today are currently down. What that more than likely will mean is lower rates.
So why would they be down? I'm just wondering.
That's above my pay grade. I'm not an economist. I think it's just how the market as a whole reacts. So do people sell off their bonds? Do they buy bonds? The US Treasury is also down significantly. Basically, bad news is usually good news for the markets or for mortgage rates.
For mortgage rates, yeah, not necessarily for the actual stock
for the markets.
No.
Yeah.
It's interesting watching what's been going on with the states and how different takes on whether or not the tariffs are good for business, bad for business, to have the markets going up and down and all over, because nobody seems to be in agreement. But generally, the people in the know tend to run the big money through the stock market and make some pretty big bets on that. So it's been interesting to watch. But you're right. The lesser
yes. I mean, our bond yields are tied to the U.S. Treasury. The U.S. Treasury is also really affected by the unemployment numbers as well, of course. And they've removed a ton of jobs, government jobs, that is going to have a huge impact on the economy in the U.S.
Right. Right. Okay.
There's some thought that maybe there's some playing going on with our oligarchs in the U.S., that they're playing the market a bit. So,
welcome to the Victoria Real Estate Political Show, where we talk politics.
I don't know. I'm not a pro in stuff like this, but I'm just that's just what I heard. I don't know.
I think.
Oh, go ahead, Andrew.
Well, we get asked all the time about where are things going, what do you expect? And it's getting harder and harder to answer those questions. It's never been an easy question to answer anyway, because if we truly knew the answers, folks, we would be multi-millionaires and billionaires.
Yes.
Because we would be able to bet on the markets and understand them in a really deep manner. But even people who say they know what they're doing don't. But it is getting even harder, I think. Just there's a lot more up and down and chaos and sideways right now.
Yeah.
And more fluctuations too. Like since COVID, I've learned so much more, taken so much more time to try and understand how, what happens over here affects what happens over here. Prior to COVID, there just wasn't the fluctuations like we're seeing now.
Okay, interesting.
I remember when we got into real estate, Andrew, in 2006, how they were talking about the interest rates all the time. And I think it was around 6% at that point. And we were thinking it was really good. It was really good. I mean, we're still dealing with inexpensive, the cost of borrowing money, relatively speaking. It's just more money.
Mm-hmm.
You're right. At the time, though, when we got into real estate, you could buy a single family home for $300,000 in Victoria. And now that same single family home is 1.2 to 1.3 million. So 6% on a $300,000 home versus 3% on a $1.3 million home, big difference.
I think when we started, yes, the average price of a home was about $299. It didn't take long before it got up to $399, $499. And then when things started to change with the government, with new construction and all the lowering, the raising of the bar of where you could have the property transfer tax written off, that really changed things. So that, I think, promoted the market a bit. But anyway, okay, I digress.
You do,
all right,
but it's
Andrew, you want to talk about the Market Watch?
right. So we do watch what's been happening week over week. So in the last 7 days, the red bars here, in the last 7 days, we had 331 new listings go live. 156 properties went pending, meaning unconditional agreements were formed between parties. 151 folks decided out of the inventory of listings to decrease their price to try to bring in a little bit more activity on their listings. 82 properties expired. Now, this compared to the week before, we can see that our numbers are a little bit up for new listings, 331 versus 304. Our pendings are pretty much on par, so the sales haven't been actually increasing much week over week, which we should be seeing, I think, in a really vibrant spring as we're moving into more spring. So I'm a little bit disappointed to see that parity there. The price decreases are up as well, which is also, again, not a great sign for where the market is. We did have spring break over part of last week. And we've had also the beginning of the month straddled this last week. So we see more expireds just because agents tend to form their contracts expiry, I think, around the end of the month, the round numbers.
So I just find that more people, as the year goes on, so you have Family Day weekend, then you have March break, then Easter's coming up. So I think it follows a pattern of increased listings after people have time to get together and talk about what they want to do. So I think the new listings is just following regular market trends. The pending also, I think it might just be that people were away. So we'll see. Pendings are always like 2 weeks out, right? Too. So.
Yes.
Right. What she means by that, folks, is that there would have been an offer made, and then unless that offer was unconditional, in which case you might see the sale posted within a few days after the rescission period is up, which is a 3-day period. But there's usually a week to 2 weeks of conditions. So there's usually a time delay between the actual agreement and the actual full moving forward. So that's when we see those pending numbers.
Yeah. Okay, so the list to sale ratio this past month was 0.471%, and last month it was 0.510.
Yeah. So, 47% versus 51%.
Right. So this just means that the absorption rate has gone down. So if you have a listing, you have a less chance of selling it slightly than you did last month, just based, I think, on the fact that a lot of people were away. And a lot of people were away. I know a lot of realtors were away, and they kind of drive the market. So
right.
There you go.
One other thing, I think it also has to do with that uncertainty word and just people waiting to see what was going to happen with these tariffs.
That's a terrible
Yeah.
4-letter word.
What? Uncertainty?
Yeah, I'm kidding. Okay. So every Monday we also get the stats of what's happening up to date. And we're looking for the full month of March of 2025 compared to March 2024. There were 613 net unconditional sales. So we're up month over year, and 1,487 new listings this past month compared to 1,309 in March of 2024. So we're also up, and total active listings, we're up over 3,000 again for the first time in a long time. And that is up over last year as well. So more inventory, more sales, more activity. And what are you finding? You're finding more multiple offers, eh, Andrew?
Well, it's interesting. Everybody's got their own little micro markets right now. I have 2 listings that are currently live, and then our team has 3 listings total. The amount of activity we're seeing is not as much as we would like to see. Part of that is geographically based. One of the listings is a little further out, and so it's not from the core. And we do find that as market activity increases, people kind of spill over into the outlying areas. Not happening as quickly or as well as we'd like to see for some of those outlying areas. And then I have a really great listing that is a rancher style property. Hits a lot of the marks. I think it's well priced. It could use some updates, but it's well worth it. And we're not getting the activity we'd like to see. So I don't know. I mean, I feel like there's not as many buyers out there personally and not seeing it. And then my buyer activity, a lot of my buyers are kind of also just waiting for the right property to come along, not finding it. So
I'm finding right now there are a lot of people who want to move, but they have to sell their home. And so they're a bit stuck in sellers right now won't take a subject to sale because there are multiple offers happening. So some sellers have to just put their house on the market and then have a long closing date. So
yeah.
That was going to be my question, actually, is if you're seeing a reduction in that subject to sale clause.
We did 3 2 weeks ago, but we'd had really short subject to sale periods, and then we ended up getting them done. We bumped one offer. What I mean was the listing that my clients were interested in had an offer on it. We figured out what the listing was that the other buyers had, and we looked at it and we realized maybe it was a little overpriced. So we went for it, listed, and then bumped the offer.
Good strategy.
Yeah. I mean, it's a little stressful right now. So it's stressful listing before buying because you don't know what you're going to get, but it's stressful buying before listing because you don't know how much money you're going to receive for your own listing.
Yes.
So you don't know what your budget is.
No, yeah, you've got to be really careful with that one.
It's an ongoing strategy that it's a fine balance, right?
Absolutely. Yeah.
Okay, Andrew, you want to talk about the total active listings?
Yeah. So we were just reviewing this in a previous slide about, we've just kind of getting over or around the 3,000 listings number, which we haven't been at for a while, but we were actually up over 3,000 listings in, last spring, summer. But, we're moving this scale is moving up pretty quick. And so based on the prior springs that we can see here, we always have this increase in activity, in listings, active listings. I suspect we're going to reach a similar peak as we did from last year, perhaps even higher. Really depends on whether the buyers do come to the table in droves, and that will partly be based on what we get from economy news and client confidence based on what's going on, again, with tariffs and so forth. The low interest rate environment is definitely helping. So that's definitely the thing that keeps us I think with buyers feeling more interested, and so that will help to keep this active listing number from going skyrocketing really high.
Yeah. So this is the total new listings compared to the total active listings. So new listings are coming on monthly, and we can see seasonally, we do expect to have a peak there in April and May. I always tell clients list in February, buy in May if you can, because you'll have more choice. We're seeing the sales also increasing, and it looks like it's following this similar pattern to last year. So we're at 600 sales for March, and fairly consistent. What people were saying at the beginning of the year was it started out faster than previously, and
Yeah.
But the listings also were higher than they are normally the first 2 months of this year, and we're up again in March compared to last year. So I'm expecting it to be a robust listing time. And also it depends on what you're listing. So single family homes may be going faster than townhomes. Townhomes may be going faster than condos. Let's see what the stats say.
Yeah, it's when we start to see the inventory rise, it's actually can be a great thing for those buyers that have been waiting for a choice. And with the rising inventory, it actually can bring out more buyers out of the woodwork. So although it can look not great to see from a listing perspective, it's not a wonderful thing to see so much competition. It can also start to drive a bit of a buyer movement when they start to see again that they actually have choice.
I'm also finding like it's neighborhood too. So I think you mentioned you had an outlying listing right now, and like sometimes a property, let's say in Langford, whatever, downtown Langford, if it's a single family home, might go fast, but the condo in the same area might not. That's what we're kind of saying.
Absolutely. Yeah.
Okay, so what we also look at is the list to see balanced market right now. So we're looking between 20 and 30%. So that's the odds of you selling your home and the length of time. So if you put your house on the market, expect that it's going to take at least a couple of months for it to sell. It's not all multiple offers, and you have to look at what the other inventory is in the area to see where you fit in to determine what your listing price will be. So balanced market means that buyers there may be some subject to sales, but it means that buyers are able to shop around a bit more.
We're not a buyer's market. We're not a seller's market. Leo, his most recent report on where we are in the market showed us in a scale, we're kind of on the buyer's market side of a balanced market, if that makes sense. So we're in a balanced market still, but we're leaning more towards the buyer's market side of that, based on his analysis, which I find generally pretty good.
Yeah, so you just have to price your listings sharply if you want to sell.
Absolutely. Yeah.
I love it when you agree with me. Wait a minute. Single family homes, Andrew.
Single family homes. Again, I mean, we're seeing in terms of prices, pretty, I mean, some up and down, but pretty even overall. We definitely had, a bit of a peak in this most recent few years, a couple of years back in July 2023. We're down off of that peak, but we are, what are you doing there, Jane?
I'm just looking to see here when it said sellers.
Right. So we can see so you're comparing that with that buyer's market versus seller's market. Yes, you can see that kind of tracks. But yeah, so we're seeing, I'd say maybe if we were to take a line from November 2024, we were actually on a track overall upwards through to February 2025. And then the average prices come down a little bit in February through March. But you see this up and down. I wouldn't be surprised to see our April stats once again go up again. Again, really depends on what we see. Yeah, I wouldn't be surprised if we continue on with a slight upward pattern, but overall it's been even.
I think also when you look at this, you have to think seasonally, we're going to have slow periods during the winter here. So November, December, we're seeing that in January, and that kind of replicated again. It felt like this fall was slow, and then it picked up late and continued on into January. Felt like everything shifted a bit.
Yeah. That being said, here we are in early April, and at this time of year, in past years, I've found that like I don't know which side is up. Sometimes it's really, really busy, and I am finding that I've got there's a little bit less feet to the fire pressure right now. There's definitely pressure when you have listings to get them sold, and especially when people think, as I think the mentality is, oh, everything should sell within the first few weeks, because I think that there's still that remnant of memory of things really sell fast. So when you have listings that are sitting for a month or two, that can be, you have to have some really important conversations around that. It is really helpful. Jane alluded to this earlier. Another thing I agree with Jane, it's really helpful to, as a seller, monitor the market, stay on top of it, know what the competition is, and don't get left behind if you see that the market is starting to change in a way that means that you should really, adjust price or get ahead of it.
And I find that like I keep track of what's happening with realtors in the Toronto and Vancouver market, and they tend to go through a push before we do, and same with a decline before we do. So just seeing what they're going through, what I'm hearing is it's slowing down. So
Yeah, I heard the same for Fraser Valley, that's starting to really slow down as well. So that's not good news for the headwinds for us, but we will see.
we will see. All right. So road townhomes, we always talk about these being a bit of a unicorn because the quality can vary so much depending on when it was built. Of course, more newer townhomes coming up of good quality, especially in the core, as people are starting to increase density there. We're seeing a pretty steady price over the past 2 years of just over 800,000. So
Yeah.
I would say here's the thing. If you bought your house in the past 2 years, your townhome, it's not going to be much higher in value. That's what the takeaway is from this graph.
But that's also true of single family. Like we go back to the single family homes, that's not really been like that big a difference either. Just go back a slide here. I mean,
But interest rates have dropped significantly.
right. Affordability has gone up then, sort of. I mean, the cost of the basket of eggs is still high. But yes, we're not seeing it's kind of boring, isn't it? When the market's going up, that's when buyers start coming out of the woodwork saying, I want a piece of this. And there's not the same urgency right now because it's been for the last couple of years, other than a couple exceptions of ups and downs and some fluctuation, but overall it's been pretty steady.
I was talking to a seller about when you advertise open houses, and I said, when I first started in real estate, we would put it in the newspaper on Mondays and it would come out on Thursdays and we'd have an open house on the weekend. And now we advertise probably Thursday or Friday for an open house on social media and through the Victoria Open House through Matrix. But I said, when people are motivated, so if you have a well-priced house, you could advertise an open house at 9 a.m. in the morning for 2 p.m. in the afternoon, and it will be full. If the people are there and they want to see the house, they'll come.
They'll make it work. Yeah.
They'll make it a priority.
Yeah. So really what we're doing as realtors is we're counseling people, I guess, on what the buyer's priorities are on our listings.
I mean, that's ultimately it. Put on your buyer's hat when you have to be wearing your buyer's hat as well as your agent listing representative hat when you're talking to your sellers, because that it's through the buyer's eyes it's going to sell. You need to speak to the buyers when you have a listing. You need to make that work.
Which is why it's important to work both sides of the market, right?
Mhm.
Okay, townhomes or condos, Andrew.
Yeah, condos is an interesting one because we've been seeing condo activity has been relatively flat in the core and elsewhere for a couple of years. It's not been a lot of activity, and the average prices have come down off of, again, you can see they came down over the last couple of years, kind of met an average of around 600,000 for a while. But we've actually seen in the last few months more people coming back to condos. And that's what I'm hearing and seeing amongst colleagues from the stats. Again, it sounds like there's a bit of a resurgence of interest in condos where they were not as popular for quite some time.
Yes, well, we had a deluge of listings, and I feel even now there's I have a few condo listings. Even now, I think sellers are still expecting to make money over what they paid, but you can see price wise over 2 years, we're maybe even.
Depends where you bought. You might make some money, but you're not generally going to make. I mean, even the difference between a $550,000 condo and a $650,000 condo. If you bought in, what is that? August, September. There's a cover over this, but December. Yeah, I mean, if you bought December 2023 and sold February 2025, maybe you would have done well. But you take into account the costs of buying, the costs of selling, take all that off, and it's not a great time. It hasn't been a great time for condos.
No.
I think it's coming back.
Okay. So, overall, what are your predictions for what's happening in the market this spring so far, Andrew?
I think I've already said it. I mean, we're waiting to see what happens with the tariffs. We're waiting to understand how the market will play out. I think there's a bit of a pause as we want to see what unfolds. But overall, I feel like we're going to do business as usual. It's going to be. I'd like to see the market come back. I feel like there's some pent up interest and demand, but I feel like there's a bit of a waiting game. I've been expecting it to be a really busy year, and we haven't been seeing it as much as I expected. I feel like there is some pent up demand. It just needs to be. We need a couple of weeks of positive news.
Yes, agreed. I feel like the housing, single family homes will do well this year. Maybe in the lower price range, like up to 1.25, 1.3. Feels like it's slower at the upper end. I feel condos are still, there's a glut of condos, a lot of choice. So people, if they want to sell, they have to price sharply. And townhomes, depending on what the product is, if it's one level or multi-level, I feel that there are a lot of people in single family homes who are wanting to downsize into single level homes. So I expect
yeah. Sorry, just to jump on that and go with it, but at a recent open house I hosted, had an interesting chat with someone who was talking about the baby boomer bubble, and how they were saying, I think I waited too long to buy a rancher because everyone is now at that age that they're going to be selling out their single family homes and looking for single level living, which is rare. And so, which is all the more reason why I'm surprised that this one we've got for sale is sitting. But there's definitely a population that is aging, that is looking for that kind of home, and it doesn't exist to the degree that it's required.
Yeah. The other thing is, if somebody's selling a single family home that's 1.2 million and they're moving into a townhome that's 900,000, but it has strata fees of $600 to $900, then they're really not downsizing in terms of price, like for the cost per month. They're just downsizing in terms of space. So the strata fees have gone up over the number of years. And so sellers just need to understand how that affects people, right, on their
It's
list
true.
sale or
It's true.
total debt service ratio.
Yeah, yeah. Elderly people tend not to do, not everyone will be doing as much updates and upkeep and yard care as people get older. And so they can control their costs a little bit more in a house and maybe let some things go and live with the deferred maintenance because they know they're not going to have to pay for it if they're looking in their elder years. So it's actually more attractive, you're right, than a townhouse.
Yeah. Just for ease of living.
Yeah.
Not cost of living. All right. If you like what you've heard today, then please send us some feedback. We'd love to hear from you. Don't forget to subscribe to our YouTube channels and comment on things that you'd like to hear. And if you have a friend who's thinking of buying or selling, please share this show with them. And Andrew, how do people reach you?
Yeah, I'm at 250-360-6106. You can email me at info@andrewplank.com. The website, andrewplank.com, or our team website, realvibe.ca, both have great resources. And we'd love to hear from you.
Okay. And Jen, with this special new card.
This looks great. I am at 250-217-4925, and my email is jen@jenlow.ca, and my website is jenlow.ca, but there's an E in the jenlow, LOWE.ca.
I realize that, and I will check it.
No worries.
Okay, and if you want to reach me, I'm Jane Johnston with the Briar Hill Group at Remax Camosun. You can reach me at 250-744-0775, and my email is jane@briarhillgroup.com. Don't forget to visit me on my website at briarhillgroup.com. And we all also have Instagram, so I'm realtyteacher_Remax Victoria. What are you, Andrew? Plank Andrew?
Yeah.
And Jen?
Good question. Mortgage broker Victoria, I believe.
Okay. All right. Thanks for showing up, everybody. And we hope to see you next Thursday at 9:30. And we'll be discussing what, Andrew? CREA?
Right. So the Canadian Real Estate Association put their report on buyer activity, or at least visitors to their website activity. What are they inputting for searches? And this is related to their searches related to Victoria specifically. So we'll be able to sort of get a little bit more of an understanding of what is of interest to buyers out there. And so we'll just be able to compare notes and discuss that.
Awesome. Yeah. Take care, everybody. Have a great week. Bye-bye.
Thanks, everyone. Bye, everyone.
Bye.